Hello, everybody. Welcome back to the Prospero.ai stock market live streams. The markets are in the green as we are opening up here on this beautiful Monday. I hope everybody had a great weekend. Welcome back. We are in the swing of things. Earnings season is really underway now. We're going to cover two major tech earnings this week, Tesla and Google. But let's take a look at the broader markets before I run through some of the topics that we are going to be getting in here today. As always, if you're a long-time Prospero Stock Market Live viewer, hit that like button, whether you're watching on Twitter or X, I should start calling it X, or YouTube. It's good for the algos and helps us grow, and we love seeing those likes come on in. So QQQ is up 0.75%. The Russell is up almost 1%. The Russell is again the leading indice on the day so far, but the SPY and Dow are also up. Let's take a look at the Prospero net options sentiment so we can keep track of it as we go throughout the stream today. Okay, so the QQQ is at a similar level of 58 right now, but the SPY is starting to creep up as well. It is up to 23 here today. So looks like the bullishness that has taken a firm hold of the market is here to stay, at least for today. Some of the stories we're going to be talking about is a tariff update that Stellantis gave on their business, and they have a portfolio of car brands, Jeep being one of the biggest, and it's still not being factored into the market seemingly the threat that tariffs can have at some businesses. So I'm going to pose that to George and talk about how concerned is he. Obviously, the new date for the tariff deadline is now August 1st. So, but we've seen these things be pushed back over and over. So I don't know how much the market believes it, but that is when they're set to kick in now. Also, like I said, Tesla and Google are going to be reporting this Wednesday. So we will be live again Wednesday at 3 p.m. So just before those earnings come in. But giving you guys a little bit of our thoughts for both of the companies. I saw a news headline that Elon Musk is refocusing in on Tesla. So I think that story, that headline even sent the shares up in the pre-market last night. So Tesla and Google on deck. Then we're going to bring up Netflix, which reported last week. And I want to dive back into the thought that George was having about how he was feeling when he saw the way the banks were reacting. And if you guys missed that, I actually posted about it as a short this morning on our socials, so you could kind of get the gist of it very quickly on YouTube, Instagram, or TikTok. But just the fact that it seems like some of these companies are having a high bar as we're entering earnings season, and even good earnings aren't good enough to have a good stock reaction. And with Netflix dropping when they reported, does he even feel more strongly about what he was sharing from the big banks? Then we have a new member of the S&P 500. Many investors had either thought or hoped that it would be Robinhood, but Robinhood was snubbed again. The stock that was added was actually Block. So most people know it as Square, Jack Dorsey's company, added to the S&P 500, reacting bigly from that news, and Hess was kicked out. So why do Robinhood and AppLovin is another one that a lot of people believe should be added? Why do they keep getting snubbed? We're going to pull at that thread. Maybe there is the politics of Wall Street behind why they keep getting declined from being added. Then Verizon reporting and stock reacting well. Verizon, very kind of boring company at this point. I want to ask George, is it now or never for them? They have a $170 billion market cap currently. A lot of these, future space tech companies, ASTS and Rocket Lab, mainly, even like the drone flying car, they're really drone companies, but like Joby, Archer, and all those, a lot of them have market caps between like 5 to 20 billion. Is it now or never for Verizon to acquire one of these companies, and could they even get it done? Like, because I feel like those companies, those smaller ones that have the cool tech, they believe in themselves. So if Verizon were to offer them, would they even want to accept it? Would they be forced to if Verizon made like a big offer, very, above the current share price? So we'll go through all of that. Then we have real estate. I wanted to focus in on real estate today because we don't really talk about real estate much, but it seems to be one of the most reactive to interest rates. And everybody, from what I'm seeing, expects interest rates to be cut, whether it's by Jerome Powell at some point soon, whether it's by a replacement for Jerome Powell, which might make them happen even sooner. But that would seem to benefit real estate a lot. And a lot of the REITs and real estate heavy businesses are not pricing that in really. They're kind of lagging. So is it time to scoop up some of those shares, some of those stocks before the rate cuts begin? And then last but not least today, we have DJT stock acquiring $2 billion worth of Bitcoin. And I want to check on DJT, because these moves in the stock can be faded very quickly. So I want to make sure it's still up. Yeah, up 8% now still. And we're seeing every company basically that announces that they're acquiring Bitcoin, purchasing Bitcoin on the balance sheet, the stock move higher essentially from the news. And I want to ask George, is that going to wear off at some point? Is this like a short-term sugar high of the market reacting to the Bitcoin? Because it doesn't really change anything for the business like in the short term. And I'm not sure why a stock would react so aggressively off that news. For the first movers, I could see it because they are taking on the most risk and they have the most to gain. But now that it's happening over and over and over, how long can stocks still keep reacting from those headlines of putting Bitcoin on their balance sheet? Okay, I see Ori commented on YouTube. So just FYI, if you're watching on X or YouTube, you can leave us a comment in the live chat and we will address all of your questions, concerns. We are more than happy. We actually love getting questions because we get to talk about what you guys are wondering about specifically. So Ori was asking about Lemonade. So when George gets in here, Ori, we'll kick it off with Lemonade, your question. We're also going to talk out, I forgot to bring up, we're just going to have a short blurb on the whole astronomer situation that I'm sure you guys have seen if you're active on social media. It's probably one of the most viral stories over the weekend of the guy being caught on the Coldplay camera. And The Simpsons somehow, some way predicted it again. Can you believe it? Question from Jonathan as well. What did George see last week to add iron? It has good gains so far this morning. Good stocks to highlight as we enter in the stream. These are stocks making big moves. I see them mentioned a lot on social media, so I'm sure a lot of people will be curious to hear us talk about them. So good questions, Ori and Jonathan. Welcome, George, to the stream today. The markets are in the green. A lot of stocks are moving bigly, and we got some great topics, earnings coverage to get into. But to start here today, we took a peek at the SPY and QQQ and net option sentiment. After we talk about the overall markets, I'll get into your questions, Ori and Jonathan, in just a moment. QQQ at 59 in net option sentiment, SPY at 24. So we're seeing SPY kind of rise up from the basement levels it's been at. I would imagine you can't be anything but slightly more bullish from seeing the QQQ and SPY net option sentiment here today and the way stocks are opening up after the weekend.
Yeah, is anyone here on X? I'm seeing an error on the stream on X when I go to it. Maybe I can reboot my app.
Let me see if I can pull it up on my phone. Yeah, I can see it on.
Oh, now I can. Live.
Yep.
Hold on. And then I will be right to that first question.
Wow, I feel like I didn't mention it in our pre-meeting, discussion, George, but I feel like we got to talk about Open Door Technologies too today because it's up 67% just today. Has to be a short squeeze. I don't see any other.
Oh man, way. Matt, our writer, was telling me that it was looking good in net option sentiment last week. He's been killing me on a few stocks. Open Door, ASTS, he's gotten in at times that I didn't. But yeah, let's jump into the question about QQQ and SPY net option sentiment. I mean, I'm feeling better about the market today. SPY net option sentiment opened at 20. It's at 18. So we're definitely looking at a much better situation than it ended last week. Let's see how strong QQQ is. 59. So yeah, I mean, the market overall is looking very strong. And, I mean, we wrote about this weekend that, these kinds of rallies, they're always going to get a correction, right? I think there's a lot of structural things in the market that's helping right now, a lot of excitement. I think a lot more retail energy like we're talking about. But I think we also have to prepare for the other side.
So Ori's asking about the stock Lemonade, LMND. Why is it ranked low in the app? It's up 10% in the past week and 60% over the past 3 months, says Ori.
I mean, last I looked at Lemonade, it wasn't ranked low. But let me look. Lemonade is at 75 net option sentiment, 79 upside. That's not low at all. I mean, both of those, since these happen on a bell curve, you're probably talking about, close to the top 20% in each of these numbers. So A, it's not low at all. B, even if it was low, I think it's important to note that it's like not everything that goes up has institutional weight behind it, right? Like, so it's just about the buyers, the buying pressure overwhelming the selling pressure, right? So there could be low volume move ups that could occur, without necessarily a ton of institutional weight, or with, retail driving the move up, closer to the same amount that institutions are. So, that's the things that a lot of our metrics focus on, kind of institutional weight. So I think that's always important to note. Like, I think it's more true that when Prospero likes something, that it's more likely to go up than, even if it's neutral, right? Which it isn't. Lemonade, like we said, it's in our most important metrics. We shared something on our Discord when it was asked what the two most important things were in terms of adding things up. And what I said was, like, pretty simply, upside plus net option sentiment. If those two are above 140, that is kind of like my binary, no go into my portfolio. That if it goes above that, it's there. If not, it's kind of like I won't go long. So yeah, Lemonade's above that, but you're just not, like, it is a retail driven stock. So unless it has institutional weight behind it, you're not going to see it get into the high 80s, low 90s, that kind of thing, unless there's that institutional weight.
Good answer for Ori. And Jonathan is asking about, what did you see in iron signals last week? It has good gains so far this morning.
Yeah, so the big thing I saw is, we talk about good signals for the market cap all the time, right? And this is actually a good comparison point to Lemonade, right? Let's say, iron, even today at a big increase, I think when I looked at it, it was closer to a 4 billion market cap. It's 4.64, right? Let's check out Lemonade.
Yeah, it's like 5 billion right now.
Yeah, Lemonade's about the same, 3 billion. But like iron getting an 80, I think it's an 80 upside and 85 net option sentiment. 95 technical flow, I think that's more today. But even just those two numbers, that's very, very strong for a smaller cap stock. So I was looking around. I was actually basically looking at, I wanted some crypto exposure after the Genius Act. And I was thinking about a lot of different, I was looking at Coinbase, but at the time I was really overweight large cap. So I didn't want to just throw another large cap in there. So I started looking at, some of the small cap names, and it was actually, I did a small cap bull filter right? And I saw Riot there, and then I also saw Iron, and Iron just looked better in the signals than Riot. But actually, it was that screener that kind of exposed me to it.
So we're seeing stocks like Iron make a 20% move today. Open Door is up 67%. Seems like a lot of other more riskier stocks are really making big moves, like Joby and the nuclear stocks, the quantum stocks. Does that tell you anything about like what inning we are in the current bullishness? The fact that these more risky stocks are kind of making the biggest moves in the market today. Are we at the end of like whatever bull run we can sustain, or do you foresee these stocks like pulling back and new leaders like the Mag 7 or the mega cap techs or anything other area of the market kind of like making the next level of gains?
Was that you or me? Oh, my internet is.
I was like, did we just lose George? I think I got you again.
Yeah, I just lost it for a second. I don't know. My internet connection looks very good. Am I on a delay?
No.
It looks fine to me. Yeah, I don't know what that was. I think it's mostly due to what you're talking about, which is kind of and kind of not, right? I think when you start to get the market at these levels, and we've seen the large caps, the mega caps just like run so much, I think people start to be more concerned about their value. And then, as the breadth starts expanding, how healthy the market is. But I think there's something else. I think I think there seems to be big bets on future tech, right? I think all of these things, if you look at quantum computing, Joby, all that stuff is future tech. And I think what people are kind of saying to themselves is like, maybe this doesn't have that much juice to it anymore. But as the breadth continues to expand, they're going to expand to these higher, risk assets, things that retail could like still get excited about, because I think some of it is like trying to grab the attention of retail traders. Like retail traders, a lot of the times when they start to see an Open Door move or an Iron move, like they'll start piling in, and that's an easy kind of safer way to get a return, because you can move an Iron more, right? If you're an institution, you start loading money in and getting it up like 6%, you're just like, hey, I think if we get it up 6%, a lot of retail interest is going to take it up 10, 12%, and then we could just ride it to the end. That becomes a way for institutions to like capitalize on the fact that there's still a lot of retail fervor in the market without like necessarily pouring dollars into, because you keep pouring dollars into, say, Coinbase, let's say, versus Iron, you're not going to move the price of Coinbase as much. So you might not get the same return on if you go into a smaller cap where you can move the price more, kind of manufacture that excitement, and kind of know at this phase, the retail traders get very, very overconfident versus institutions. So they're counting on that. They're counting on NVTS is another one that's just going up a lot today. And I think they're counting on the fact that it's just like, hey, if a lot of retail is saying Robinhood and that's down today, we can move it into a small cap, start moving a small cap stock, and we know we'll get follow on that way.
Now, what you were saying about the future tech, how that is being the stuff that's like, institutions and even retail are interested in. Do you think AI is driving the fact that like maybe models are pricing in like rates of improvement that we haven't seen before? So these future tech companies, which just 10, 20, 30 years ago, it would take them decades to finally fulfill the promise of their tech. Maybe that rate of improvement is from AI is being like factored in, and instead of decades, it's 10 years at most, and even sooner for a lot of these companies.
That could be some of it, but I think it's mostly the extent that the market trades on momentum, right? I think, and I think that people would expect the market to continue to trade on momentum. It's just like, I think previously buying a stock like, Joby, my biggest concern would be, it can't support these valuations, all these what ifs around like how big of a correction, when it comes, how hard. But I think you can look at this market right now and say that, maybe a lot of stuff is going to keep going up, and maybe you can get a nice return on these future tech things, and people are not going to worry about the valuation. And that is, I think, the big difference. I don't think anybody's ever going to get, concerned about the valuation with Joby. I think it's just like when the market starts to go down or when the market loses its momentum, that's when you get out of it. And it's gonna move everything down and the risk assets down more. So it just becomes a question of, figuring out the whole market moving. And that's actually a lot easier for institutions to figure out when the whole market is shifting than figuring out like, hey, when are the people around me going to say that Joby is no longer a good value? When are the people in Coinbase or any of these other things going to say it's like not a good value anymore? And, for a stock like Coinbase, it's a lot closer to a good value, even though it's like, trading pretty aggressively with the crypto move. The safer part about that is like, even if some people decide it's not as much of a good value, that's a slower burn and it's harder to move the stock price. Whereas something like Joby, if one or two of the large players decide it's no longer a good value, that thing's going to really start going down fast. So you kind of have to look around at other institutions that are in it and say like, when are they not going to think it's a good value? I don't think anyone's concerned about that anymore. I just think they're concerned about like figuring out when the momentum ends. So you as an institution don't have to be as concerned about like another institution turning around and being like, is this a value? I don't think that exists as much anymore. I think people are just much more content to ride the momentum and not worry about value more than they've ever been.
So one more question on this topic before we get into Ori's question. So how you're saying institutions like maybe they'd rather play Joby because they can move it more because it's a smaller market cap and all of that versus Coinbase or like a larger company where the money goes less. I remember hearing about how retail kind of missed the like April bottom rally initially because they were feeling more bearish at that time. Do you think, I don't know, I don't think they communicate with each other, but like they all kind of have the same mindset where like they're like, okay, we missed the rally, but we're not going to underperform the market, so we're going to move these small stocks so we can catch up on these large gains in these smaller companies, and then once we're caught up, and like maybe we sell them at that point. But like I don't want to say manufacture or collude, but like it's understood that it's like, okay, we underperformed, so we got to catch up, so this is how we're going to do it, and because like we're not going to underperform the market.
I think a lot of the times, like there's some sinister stuff on Wall Street, but I think a lot of the times, like the idea of collusion is not as black and white as some people think, right? The Wall Street world is pretty insular, right? So sometimes it's just a question of like, you're talking to your buddies, you're going to a conference and you're just like, hey, we think this is the bottom, right? And it's just an exchange of ideas. And that exchange of ideas is no doubt like exclusionary to retail, exclusionary to a lot of people, right? But I don't think it's as nefarious as people often think. Because at the same time, you will have other people on Wall Street that are trying to like feed you bad information too. And it's actually your job to figure out like, oh, are they faking me out? Are they saying the rally's not coming so they can get it at a lower price first? Like, so it's not necessarily always that straightforward, but I just think that some people don't understand that it's not always like a nefarious collusion kind of thing. Like these people are friends. They run in all the same social circles. And I think that's a lot of it sometimes. When you start to like, when you have people on Wall Street, you start to look around and you start to say like, oh, is this like, where are we at on this? Do we think this might be this, this bear run might be coming to a close? Are we feeling good about the trade situation sorted out? All of that is going to play into, maybe you have a conversation with, a couple of your fun friends and they're like, I'm not going to buy this week. I'm not sure it's turned around, but if I see the market go up another 3%, like then I'm going to start loading up. And so you have that conversation and then you see the market start going up, 2-3%. You're just like, okay, now I know my friends are buying. I'm going to buy too. And a lot of the times it's just as simple as that.
So we got another question from Ori on YouTube asking about the Discord. Just a quick overview, what goes on in there. And I will say that there is a link below if you're watching the live stream to join the Discord if anybody's curious on joining.
Yeah, I think the big the big thing that basically happens on Discord is you'll pretty much get a live stream of questions to me. And a lot of times some people will ask me questions on Substack and private messages, and I'll funnel them to Discord just because like whatever question you ask there, it can benefit everyone potentially. Like sometimes if I'm seeing some things in the market, I'll post some extra color there. But the main thing I would say that it is, and more expanded, and it's free right now, by the way, is just a Q&A. I'll normally, like, you know, sometimes I'll answer things pretty quickly, but normally I'll answer, you know, anything within a day. You know, there's other things like people request us to add tickers there. It's a much easier way to get like our attention there. Yeah, but I'd say the main thing is it's kind of like a live window into questions with me that aren't in the live streams.
So we have to bring up this news story that just went so viral over the weekend of the astronomer CEO getting caught on the Coldplay cam. And I mean, just the reaction from the two people caught went so viral. And people were making jokes about how The Simpsons, it was like something The Simpsons could have predicted, that there was a viral snapshot of like a Simpsons cartoon. But I guess this is a testament to AI. It's so easy to make these fake images these days, but I guess that wasn't real. But it's just funny, and it just took I don't know, because everybody's interested in relationships, I guess, but then the business world also like latched onto it since he's a CEO and a company relationship, but just too funny and so viral.
Yeah, I mean, I've never seen more LinkedIn posts on a topic, and they vary from like funny to be like, oh, we learned an important lesson here, and like actually like. I find LinkedIn to be like some of the worst content. Like it's just awful. Like it's just everybody it's everyone like grandstanding on things, and it's just it's kind of funny. I will say it does show like how big of an experience it is that even like people are like pretending that The Simpsons predicted it by using it's basically like a Gen AI picture that ended up like circulating. But I do think the funny thing. In some of these like stupid LinkedIn posts, it's just like, see, you know, you can't be a public figure, a public company CEO, and like and get away with this stuff anymore. And I'm just like, well, that's a pretty funny point, because if you look at like a lot of this stuff, like look at like Puff Daddy that just got like basically like acquitted of like, I would say like, you know, far worse things than like a guy that's like cheating on his wife. And it's just like, well, no, it's not like if you're a public figure. It's like if you're a public figure and you go about things in a stupid way, that it's gonna catch up with you. And I just think the funniest part about that is like it's like their reaction to it is just so stupid. Right, because like they don't like you're looking guilty by doing that, and it just like was obviously a gut reaction, but it also is an air of like self-importance as well, because it's just like nobody cares about you in that stadium. I mean, I guess some other people were around, someone that worked for her, like whatever, but when you're actually on the Jumbotron already, it's over for you. You might as well just like maybe just like you don't have to kiss, but maybe like yeah, it's just there's so many stupid things about that. But I do think it's really funny where it's just like, oh, like you know, you can't do that anymore if you're a public company CEO. It's like, well, yeah, like certain people. I think Jensen Huang could get away with a lot more than that. Like given how good his public image is, it's just a question of like how much political capital like you have built up. Like I feel like if he did that, they'd be like, oh, Jensen, he wears those leather jackets. Everybody wants his attention. Like I really feel like that might be the story, but it's like, yeah, like part of it is like the way they reacted and like that they clearly just like felt so guilty about it or were guilty about it that happened. But I do think that's probably like the funniest thing that's come out of it. It's just like well, like everybody's like, well, you have to be accountable as a CEO in this day and age. It's like, well, like, no, only if you don't know how to intimidate people and you're stupid. Like, and I'm not saying intimidating people is smart, but we certainly live in a world where it's like, yes, people can get away with that, just not like idiots. But yeah, I think it's a really, really funny thing, despite some of the annoyances around it. It's like, I think there's a reason it caught hold. And like, one of my friends that's a bit of a like always spouting conspiracy theories is just like, they're just like, yeah, what if someone wanted him out? Like, I'm just like, oh, I don't know. I feel like Chris Martin would be a very hard person to bribe. He didn't seem like he was in on it. And it's just like, yeah, I was like, how much like that's just like not that big of a company. His shares are worth like, I think it said like 20 million or something. It's just like, do you really think you could bribe Chris Martin with even like $1 million just to like ruin someone's life? I don't think so. Maybe if you had 10 million, but then you're talking about half of that guy's net worth at that point. And, it might be easier to like go through, other mechanisms. You could probably have him killed for less money than it takes to bribe Chris Martin. Not that I'm advocating for that. But yeah.
Well,
it's an interesting story.
Could also just not be cheating, and then there's no risk for him. But you're talking about Jensen Huang, and it's like, how many babies does Elon Musk have with different women at this point? Like, case in point right there. Jonathan is asking about Alibaba stock, and I am curious on your answer because I remember seeing good signals for them. And he's just asking, why did you add them, even though you have a dislike for like the Chinese stocks overall?
Overall, I do dislike Chinese companies because, for those reasons. It's not racism. It's that their reporting standards aren't very strict. And that's what you see. You see them like constantly undervalued in PE. And, part of that is the geopolitical risk. But part of it is like, you can't necessarily trust their numbers. The Chinese government is known to lie about numbers. And there's a very close connection between the Chinese government and large Chinese companies. So you don't know if the numbers are real. Like that's a major problem if you're going to be like, oh, our signals really like them, but maybe our signals really like them on, bad numbers. I mean, that's the nice thing about the options focus though. Like, it's American options markets that are betting on them, and I overall, trust them. But also, like, the main thing why I can overlook the geopolitical risk, which I do think there's always there's always risk in China. But basically, like, I think with the H20s being allowed back into China from the NVIDIA chips, like, I do think there's positive tailwinds on the China US relationship that kind of has me grade down, the risk there. Like, I do think it's a big step. And apparently, like, part of that, I was like listening. I was listening to like some NVIDIA things because I'm going to do an NVIDIA space with Whole Mars blog, by the way, tomorrow at 1 p.m. Eastern. If anyone's interested, I'll be retweeting it. I think I'm going to be the NVIDIA bear, like, because he's always the bull case. I'm like, I'll take the harder one. But I actually think that the bear case in NVIDIA is going to be my toughest one. Like, I did Tesla, which there was some significant risks to it. Palantir, where there's like very legitimate valuation questions. But I honestly don't think NVIDIA is a bad value right now, especially because of like the tailwinds that we mentioned. But no, I think that that's a big step that like Jensen Huang convinced Trump of that, because it's probably ground that he didn't want to give up in his talks with China. And the fact that he did give that up probably is very good for that relationship. And like part of like the geopolitical risk that I feel with the Trump administration is that you never know if Trump's going to get pissed at China someday, tweet something, and Alibaba's down like 10%. But I think in the short term, with that concession, the likelihood of good relations for the immediate future is higher. So that's what got me over the hump. And also consumer cyclical stocks had a pretty good end to last week. And I could diversify a little bit out of my like tech and actually like financial services heavy portfolio all of a sudden. Financials, not financial services.
Well, I want to ask you another question about the macro a bit, because Stellantis, which is a car company, owns a bunch of brands, Jeep probably being the most notable. They gave bad guidance from the tariff impacts that they've been feeling already. So for the first 6 months of the year, they're withdrawing their full year guidance, and they are expecting a net loss of around $2.68 billion from the tariffs. And nobody's really talking about the tariffs at this point, and there's still an August 1st deadline date. I mean, this is like the third or fourth deadline date we've had now, so I don't know how much credence anybody's putting into that date. But um, this seems like the first tangible impacts that I've seen of like a company kind of like reporting bad data from it. Does that concern you overall, even if it's not like the overall market, maybe just car companies or any very big material companies?
Yeah, I mean, we also saw some problems for Tesla, but there's other things going on there. Yeah, my attitude is definitely we don't know. Uh, like, I think it's just what you said. We haven't heard of a lot of impact yet. So it's hard to be like, oh, well, there's a lot of impact because we haven't really seen it. I think I would guess that Stellantis probably has a good bit of their business in Europe. And I think those are probably where the tariffs might impact the most because there's a lot of alternatives. Like, I don't know what their sales are like in China, but at the end of the day, I think if you want an American car, you're already overpaying versus the cheap Chinese alternatives. So I think if it's just something that you want, you might be more prepared to pay an extra premium for it. But I think in Europe, there's probably much closer alternatives. And in Europe, I'm not even sure that American cars are viewed as a luxury item in the same way that I think they'd be viewed in China. I think a lot of the things in China, and again, I don't know their businesses, but I'm just like how much Stellantis is there, but I'm just kind of comparing. I think owning American items in China is viewed as like more of a luxury thing in and of itself. I think even like people like Americans are paid to hang out with like rich Chinese people. I don't know if that still is going on in this, but I know that was something that went on, in the last, 5 years, 10 years. So yeah, I think that's a big, that would be my guess, that it's just like, there's more substitute items for a car as you start like having import tariffs for America. We're just like, oh, I might as well buy a European car. If it's going to be cheaper. European cars are already like very good. And maybe they're like some of these American cars are viewed as like a cheaper option versus like, Mercedes or BMWs or things like that.
So I looked up in Grok their international revenue breakdown, and it's 45% North America, 38% Europe, 7% South America, only 2.5% China. And I think they are a European company because they're giving some of the numbers in like euros. So that must mean they're headquartered over there.
Yeah, there we go. Like, I think like that was my thesis and kind of proves out pretty well there. 38% of their business. That is even more than I would have expected, actually. So yeah, I think that's I think part of it is the price, but also I think America has taken a big hit in Europe, especially. I think the American, like before the tariffs, I think American politics overall were kind of like looked down upon. And I mean, I don't think like Europe has a very a high sensitivity to like, let's just call them strong political leaders, which I wouldn't call Biden, and I would definitely call Trump if we're gonna, be as accurate and fair as possible. I think strong leader is probably a good term to use. And so I think there's also a reaction to that. There's a lot of residual fear and I think disparaging ideas about strong leadership that I think the price could play into it, and then also it could be like, nah, I'm not buying an American car anymore. There's other cars here.
So speaking of strong leaders, we have Tesla earnings set to come out on Wednesday, and Google also will be out on Wednesday. So a big day on Wednesday. We'll be live just before the earnings are released, so we'll get our final thoughts then. But how are you feeling a few days before? So let's see. Of the two companies, which one are you feeling better about? And then which one do you think will make the biggest move one way or the other after the earnings are released?
Meta and Tesla?
Google and Tesla.
Google. Oh, yeah. Okay. So I don't know what to make. Like I don't think Tesla's earnings are going to be very good, right? I just don't think like the products that they have live right now, aren't like the best products in terms of how they're like performing and their trajectory. Everything they have is like on the hope of FSD, on the hope of the Tesla bot, and like they've had bad like last quarter was a bad quarter, but the stock performed very well. So like who knows? Like I don't expect their numbers to be good, but if they surprise up at all, like analysts are probably starting to grade them down. I think it'll be a very nice price movement for them. And if they miss down, I think it could either be, or hit on kind of the disappointing numbers. It could kind of be anywhere from, bad to good. We've seen Musk just like sell the future and have good performance, even on bad earnings. So I think you're dealing with something similar but different at Google. Like at Google, I think they could even post good earnings and they really have to sell their future better, which they can. There's been some positive reactions, positive announcements. I think people are starting to like Gemini more. But I think it's kind of the opposite with that. Google has not sold their future very well. So I think even on good earnings, if they don't tell a good story about where they're going and their new product lines and everything, I think it could actually have like a bad result for them. So I actually would probably expect, better earnings in terms of the probability of beating. Like, I think YouTube's a great business. I don't think any of the like other Gen AI providers have eaten their core business enough for it to be problematic for their earnings. But that's going to be that's an interesting story that's going to continue to develop. But no, I think that they're both going to be interesting. But Tesla especially, like, are there going to be bad earnings and Elon Musk isn't going to be able to manage the story this time? Doubtful, but it's going to be interesting to watch.
So I wanted to also continue pulling the thread on the earnings discussion that going back to when we were covering how the big banks were reacting to their earnings. It seems like so far in the limited reports that we've had, decent to good to mediocre, unless they're like amazing earnings, it seems like stocks aren't reacting too well. And I think Netflix is a good example of that also, building on the thesis that you were kind of building off the big banks where they had good earnings. They, there was nothing really wrong about them. But then the stock was down 5% the day after they reported. I'm wondering, like, is the bar just too high for a lot of these companies that have made major moves? And would you lean towards stocks reacting negatively to earnings unless they are able to just like completely blow away what Wall Street is expecting?
I mean, I think in the case of Netflix, I think what you always have to remember is the Wall Street consensus estimate is not necessarily what the large hedge fund owners are expecting, right? Like, yes, there's general movement on a beat. But I think when you see a company like Netflix go down, like it's trading at a pretty generous PE, right? So I think what you could be seeing, and this is like kind of nuanced that like I think a lot of like kind of people that are newer, still learning, don't understand, is that it's like all of these investors in Netflix have their own projections, their own earnings. And I think it would be quite reasonable to actually say, oh, like some of these places that were bullish, that were valuing it very high on a forward EPS basis, right? They could have actually been expecting them to beat it by more. They could be saying like, oh, if it doesn't hit like certain numbers, we're going to take our profits now because it could mean that their growth isn't accelerating at the rate that we expect it to be able to hold these valuations, right? So I think that's probably a lot of what it is. And like, yeah, I mean, look at the difference. Verizon, right? On a Verizon investment, like you're not expecting crazy growth. You're probably like pricing in something very close to the consensus because you're not in Verizon because of the growth, right? You're in Verizon because it pays dividends and you think the business will perform well enough that the stock will, maybe, beat the market a little bit. But the thing about a dividend stock, right? Especially one that pays high dividends like Verizon, like you don't actually necessarily like, it could be a underperform the market a little bit, and because of those dividends, actually have like a higher total return for you. So, and in a dividend stock like Verizon, like you could say that in a down market, right, it's going to have less risk assets than a place like Verizon. So it's also giving you more downside protection. So yeah, on a stock like Verizon, you're not necessarily even trying to grade up its growth, like figure out because it's just not growing. I mean, before I keep
I have
saying,
ideas for Verizon on how to become a more growth company. So after you're done on this thought, I'll bring it
I
up.
was like, let me just check. Verizon is a 30 growth. Yeah. So it's not something that you're really expecting. So yeah, pretty much it's very different. For a stock like Verizon where you're not expecting growth, any beat is going to be optimistic.
Mm-hmm. So speaking of Verizon, I want to pitch an idea for you, George. So like you're saying, Verizon, very, very boring company at this point, slow growth, basically just trading for the dividend, low valuations. Is it now or never for Verizon? Because it seems like their business is kind of slowly being replaced, or has a threat of being replaced by these companies like ASTS, Rocket Lab. Obviously, Elon Musk has Starlink and all that. Do they have to acquire one of these companies while they are still small enough to be acquired? Most of these space companies are trading between like 5 to 20 billion in market cap. Even like the flying car, air taxi, Joby, Archer, all of those. Should Verizon make a move on one of these? Their market cap's around 170 billion. I'd imagine at some point these companies, if things go the way we think, they'll be 50, 100 billion, and then it'll be maybe too late for Verizon to acquire. So, do you think they should make a move, and can they?
I mean, first off, ASTS makes a lot more sense than Joby, right? Like, I think that's way, like, for a company like Verizon, that's way too, like, ASTS, I think already has made maybe a strategic investment, maybe like a revenue financing. So it makes way more sense there. In terms of, would they take an offer at like 50% above or like something like that? Like, that actually really depends on a few things. It first depends on the operating agreement that the corporation has with the founder, the CEO, and how much ownership. Like Mark Zuckerberg, in a pretty legendary, fashion, controlled. Like, I don't know how much that's changed, but he had super voting shares. So basically, you couldn't make him do anything. And I think Elon Musk has a similar arrangement. I don't know how much that's changed. I mean, I guess you can always fire someone for cause. And I think that's like, you have a responsibility as a public company. But if you don't present any cause, but I mean, it doesn't matter. Let's just use Zuckerberg as an example. Like, you also have the component, if you have that much control, of it being your choice to do it, right? There's plenty of constructions where like the board or whoever can force a CEO to take a 15% deal and 50% above market deal, and they absolutely would. There'd be very few boards that would turn down a deal like that if they had control. But if you have control, right, and you get a 50% above the market deal, right, you could very easily say, that's a good deal, or I think it's worth, 300% above the market. You're not in my ballpark. Or you could basically say that like, maybe 50% above the market is fair now. But I actually believe in my company so much. I know in 5 years, it's going to be worth 10 times this. So why would I cash out now? Even if I think that's a relatively fair offer to where we are today, some of it's just a self-belief. But yeah, I think that it really, really depends on, the CEO and how well they've kept control, really.
So I wanted to bring up Block stock today. We get a lot of, or not a lot of, but a lot of people are curious about XYZ that are watching the stream. So you'll probably be happy today if you're a shareholder because it is up 8%. It was added to the S&P 500. And a lot of people who are interested in Robinhood stock were disappointed again being skipped over. It seems like every time there's been a stock added, like everybody thinks it's going to be Robinhood, and then this time after time, it's a different company. I'm wondering, because Jack Dorsey, the CEO of Block, longtime entrepreneur, Silicon Valley guy, is probably friends and has relationships with all these people, probably viewed from the outside as like being an inside, Silicon Valley, Wall Street person. And then you have a company like Robinhood that's kind of like a disruptor from the outside, kind of trying to shake up, the banking system and all that. They're making a lot of big changes, a very big competitor for a lot of the banks. Do you think that has like a politic like within Wall Street? Like, you think there's politics going on why Robinhood wouldn't be added and other companies keep getting the nod over them?
So I believe that, especially like that, especially with this latest thing, I think some of what you're saying is right, but I actually kind of think there's more like form around like the upside and the downside, right? I think that Jack Dorsey is a known commodity, and a known commodity that's like scaled and sold, right? And that is, that's always going to be viewed as more as by the market. We always talk about headline risk, which is basically just like the risk that anyone ends up in the headlines. Like everybody on Wall Street cares about that, but the S&P 500, of course, cares about that a lot. They don't want some scandal dragging down their whole index, because the company is down 30, 40, whatever percent. So I think that's, if you're looking at this, the circle, like the full circle, I think Jack Dorsey is viewed as a very low risk. And then you have Robinhood that, has previously gotten the largest FINRA fine ever, has found its way into some scandals. AppLovin, maybe it's just a short seller coming out after them, but has had some scandals, has had a scandal that was like kind of ongoing in the way that they're like, I think, reporting their revenue is, I think, what it amounted to. So I think in both those cases, you can see like the S&P always says it's about market cap, but it's about discretion too. And I think that discretion is really about, what they think of the management team and how they're managing headline risk. And both those companies, like, I wouldn't be surprised now that we've seen Robinhood passed up a few times. I wouldn't be surprised if they're saying to themselves, like, let's give it another year. Let's see if they can stay out of a scandal for another year before they do it. And same with AppLovin. Like, let's just make sure that this, dies down. It doesn't keep bubbling up before we add them. That's the only thing that makes sense to them for both of them, because like the upside on Robinhood and AppLovin is way higher than Block. It just is. Block is the safer choice.
What do you think is the reason for that? Because it seems like Block has strong leadership. They have like a big market that they're going after. They're one of the companies that was like kind of embracing crypto early, and they haven't had anywhere close to like Coinbase, Robinhood, SoFi, like all these other fintech companies have performed much, much better. Can you point at anything as to why Block shares have like underperformed?
Yeah, I think that, what we're basically looking at is a company that's just like not like, they're more of a steady growth company as opposed to an exciting growth one. Like if you look at the revenue, trajectory, and the market and how fast some of these places are growing, like AppLovin and Hood, those are both like massive businesses in huge, massive growth markets, that have good margins. Like Square is kind of like, I would say not as big of a market. And it's just not the same growth story, not the same, like, I mean, the margins on it are good. But I just don't think it's as exciting. It could get the same adoption speed as those other two companies.
So I have one more topic left to bring up on stream today. We've had over 2,000 viewers. Thank you, everybody, for tuning in today. I hope you liked the stream so far. If you have, hit that like button, whether you're watching on X or YouTube. And any last second questions, be sure to type them in the chat. We'll be happy to get to them, even if it's as we're switching over to the model portfolio. But I want to bring up real estate on the stream today because I feel like everybody is expecting rate cuts to occur pretty soon, whether it is at, it's at the hands of Jerome Powell or a replacement. It seems like everybody is expecting rate cuts. And I would imagine that that is going to benefit the business of real estate companies the most. They're so dependent on it. So is it time now to scoop up some of these cheap shares before we get that boost to these businesses?
I mean, I'm looking at the rate cut for the next meeting, and it is still a 95% chance that we stay the same. Okay, yeah. So we're starting to get into a 60% probability of a cut next meeting in September. So yeah, that's definitely interesting. But we have to see, we have to see how these inflation numbers come in. I think they have been not quite what you want them to be. It's not getting towards that 2% target. I think if Powell stays and we don't see inflation getting down to, maybe 2.5, 2.4, which it very well could, or we could see it being sticky with these tariffs, I don't think he's going to cut. Like, I think these probabilities are where they are, just like assuming that inflation continues to improve. But I think per the earlier story, like, we are seeing inflation, I think, be a little stickier than people expected. We are seeing like tariff impacts trickle in a little more. So I think we have to watch for that before we start betting on like real estate, which, only will work out if rates go up versus like, a tech, a small cap stock, like those could go up regardless if rates go up or not, and actually go up a lot more than real estate if they do go down.
Question for Gilbert before we do the switch over. Seeing coin at 100 net option sentiment, is the upside score volatility holding it back?
How's it doing today? I mean, I think this is, up 2.65 today. Let's look at it. It's going up a lot. How much more do you need it to go up? It was like, let's see, last week on Monday, it opened at 392 and it's at 430. Like, yeah, I don't think it's being held back. But also, like, I wanted to check that, but also it's important to always note that, like, these things aren't instantaneous. Like, we guide between, like, on a net option sentiment, especially a move or a high signal, like if something stays at like in the 90s or 100 and doesn't go down, right? It changes if it goes down. We kind of can see the impact anywhere between 1 and 30 days. On a long-term signal, we say like you got to wait at least 6 months to have that, come to fruition. So yeah, I think the move last week was very appropriate for a stock at its level. Could go up a lot more, but yeah, that's why we get into things like iron, because I think we're of the belief right now that, we added AMR too, that there's, in some of the things we saw next week, that there's more upside in small caps and kind of similar downside as some of these large and mega caps. That's why we've, put them in our portfolio more.
While the markets are still in the green, we are near the all-time highs and the signals are looking bullish. So it's going to be an interesting model portfolio update. Everybody stick around. We'll be back with George on the other side in just a minute. I will take you through, let's see, let me make this up big. There we go. I will take you through the signals that we were seeing, if there's any changes in the Prospero app. If you guys want to look at any stock specifically, or you want George to look at any stock specifically in our next segment, just comment them in the chat and we will take a look. If you've never seen this before, he's going to make live changes to the model portfolio so you can see what we are adding and dropping. I'm going to take a peek at the QQQ and SPY net option sentiment right now. So the QQQ is at 59 and the SPY is at 21. So not a big change in the signals from the beginning of the stream today. Let me just shout out all of our viewers. We got a lot of comments today, a lot of viewers, hopefully a lot of likes, maybe a couple follows on X and subscribers on YouTube. So thank you all for being here. Let me take a look across the markets and see how we are doing. It looks like the QQQ is actually just starting to pull back slightly from the highs of the day, just slightly, still well in the green. It's actually now leading over the Russell, so the Russell is pulling back a bit more. All of the indices are within 0.1% of each other, so no major outperformance there. Let's see if there's any big moves in the Mag 7 or in Bitcoin. Tesla is now in the red after opening the day in the green. Interesting to see that. Looks like all of the other Mag 7 stocks. Let's check in on NVIDIA. NVIDIA is red too actually now, so a little bit of mixed amongst the Mag 7. Check Bitcoin. Bitcoin is slightly green. Yes, slightly green. Oh no, Bitcoin is now red too. So we're seeing a little bit of a softening in the moves that we had opened up with here today. Something to keep our eyes on. Gilbert said, got it. Yeah, I meant holding it back as a portfolio ad. Iron was okay. I think that was lost in the translation. That's unfortunate. But George will see it when he gets back in here. So let's see. Iron was definitely a nice ad last week. Let's look at Iron signals versus Coinbase in Prospero. It could have to do with the caps also. George, it seems like we sort of, Gilbert clarified what he was saying. He's saying, he wasn't saying what's not holding back the stock from like going up or down. He was just saying from adding it in the portfolio versus Iron.
Oh, yeah, I think, yeah. So it's really just a function of having so many like large caps in the portfolio already. When I was looking to add, I mean, it looked good. I just had way too many. Like last week, like I had NVIDIA, I had AMD, I had Palantir, I had Hood, I had App, like a lot of large cap risk stocks, ASTS, VRT at one point. So yeah, like I just like I wanted some exposure to crypto. I didn't necessarily want another larger mega cap stock. So yeah, we're just like, and also I saw, like I said, I was more bullish on small cap stocks than I have been. So all that, added up to a winning thesis, it looks like.
Thumbs up in the chat from Gilbert.
Okay. Let's do this model portfolio. Okay, we're going to share our screen in a second. I'm going to need the QQQ and SPY and then option sentiment in a second.
Gotcha.
All right. I am ready for it.
All right. QQQ is 59 and SPY is 21.
Too quiet today. I don't know what's going on with my sound. $21.59.
Yep.
Okay. The sectors. Yeah, see, consumer discretionary is doing well, but not Alibaba. I guess we need to pick a different consumer discretionary.
We'll look for exposure on consumer discretionary bulls and energy bears.
Oh, actually, I like how that was better. Okay. Well, I don't know if we want to add open.
Currently up 70% today.
I know, that's just like crazy.
880 million shares traded already.
Wait, is that earnings or is that news?
Open?
Yeah.
Open is just like short squeeze social media insanity right now.
Gotta watch out for those squeezes. Oh, that's annoying. Get out of one of the core weaves.
Google set a timer for 20 minutes. All right, 20 minutes. Starting now.
Oh, what's going on with Beyond? It's like a short squeeze day.
Wonder if GameStop will get some of the short squeeze excitement.
Yeah, what's happening with it today?
I just took a look. It's actually red, slightly red.
Okay.
Beyond in Prospero, 0 upside, 100 downside, 90 short pressure.
I know, we're holding it. Is ANET a win for us?
Yes.
I don't think I can get it on. I don't think I can get it on open door. It's too crazy.
What about on the opposite side, like short? Like if you saw this stock just like it's at
No.
$3 right now. If it was like 7 at the end of this
No,
week,
it could be down 20% tomorrow or more. It could be up double this.
Mm-hmm. It's an interesting list. There's like a lot of new companies on there right now.
Yeah. TSSI. Ryanair. What is going on with Ryanair? No, I'm not taking it just on that. Oh, I will take dips though. Getting a little more consumer. Should I grab Riot? Yeah, why not? We'll get out if things turn. All right. Yeah. All right. Okay. Looks like we do have our mid cap options. We got other materials. Yeah, we can get. Do we go back to the Smuckers? Well, I don't think so. It's RBA. 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I think I feel good about that. Let's just go back to that for a second. Yeah, I do feel good about that. Actually, I'm just gonna check one more. I don't think I really want. Yeah, I don't want that. All right. Okay, done with that. Let's check on this.
Claire is asking about stock ticker EQT, down over 7% today. Can it come back up?
What is?
EQT is the ticker.
Oh yeah, that's like a real estate stock, I feel like, or something.
Natural gas production.
Oh.
Pretty low net option sentiment, 27.
Okay, yeah, let's get rid of Nokia. Is that a win for us? Hopefully it is. We're checking out. Oh, I'm not. CoreWeave is. I'm holding. How many positions do I have? 1, 2. Yeah, I'm not getting rid of this. Now the only question is if we get out of Nokia. I think that answer is yes. Okay. Any other questions?
I do not see any other questions at the moment.
I is it so quiet?
Man, I can't wait to take a look on Wednesday at some of these stocks that have been short squeezing today. Got to keep a list. Open Door, Beyond, some others. We'll see.
Yeah.
We'll see how it goes for the rest of the week for these companies. And of course, Tesla and Google Wednesday. But until then, everybody, we'll see you all Wednesday at 3 p.m. Thank you for tuning in today. Thank you, George. Great topics again, great discussion, and we'll see everybody then.
Thank you.
Bye, everyone. Thank you, Mario.